a set of metrics by which to evaluate the robustness of various digital currency technologies against the requirements set by various stakeholders. Identify areas for standardization to enable implementation of digital currency. Organize a conference on an annual basis to share information on best practices, technical standards, and lessons learned on digital currency implementation. To achieve the above objectives, the activities of the Digital Currency Global Initiative are focused around three main pillars to drive the synergetic engagement, innovative use, and standardization of digital currencies. Three working groups are set under the standardization pillar. First, architecture, interoperability requirements and use cases. Second, policy and governance. And third, security and assurance. The relevance of cash as a means of payment in developed economies is diminishing. Business and households are increasingly turning to cashless payment methods, such as debit and credit cards and e-wallets. Now, ubiquitous services such as online shopping and other services seamlessly integrate electronic payments into their interfaces, creating better use experience. Cash is generally incompatible with the digital economy. As households purchase more goods and services online over time, demand for cash as means of payment will decline further. There are important benefits for government reducing its relatively high reliance on cash. Digital instruments are more convenient, efficient, and potentially greener than cash. A central bank has the sole right to issue paper notes, fiat money, to the general public and distribute them through commercial banks. A retail CBDC is a digital payment instrument or type of digital money, denominated in the national unit of account, and a direct liability of the central bank, which is usable by members of the public. It can be observed that the issuance model for retail CBDC in some pilot implementations are also based on the same distribution model, albeit with certain modifications, which we shall hear about during the webinar today. Central bank digital currencies, or CBDCs, offer in digital form the unique advantages of central bank money, settlement finality, liquidity, and integrity. They are an advanced representation of money for the digital economy. Digital money should be designed with the public interest in mind. Like the latest generation of instant retail payment systems, retail CBDCs could ensure open payment platforms and a competitive level playing field that is conducive to innovation. Unlike physical cash, which is simultaneously a store of value and a medium of exchange in itself, digital money is first a store of value and can only be used for payments if there is a process in place to transfer balances. According to the Bank for International Settlement, more than 80% of central banks are engaged in some work on CBDC. Our panelists today are engaged in discussions on pilot CBDC projects, and we will hear from them today about their retail CBDC project design, which will provide an overview of the challenges facing central banks in retail CBDC implementation, as well as the technologies behind such innovations. Let me introduce our panelists. Speakers will take the floor in the following order: Mr. Peter Kirstens, Advisor, European Commission, and leader of the Policy and Governance Working of the Digital Currency Global Initiative. Ms. Novlet Panton, Division Chief, Financial Market Infrastructure, Bank of Jamaica. Joan Schmalholz, Advisor, E-Krona Pilot Division, Riksbank. Ian Vitek, Information Security Specialist, E-Krona Pilot Division, Riksbank. During the webinar, our speakers will shed some light on the thinking behind the architecture design for the retail CBDC projects on which they are working, to provide some answers to questions such as the architecture for issuing the retail CBDC, the privacy of transactions, identification requirements, and interoperability with existing payment systems or other digital currencies. Now it's time to turn to our speakers. I'll now be inviting our speakers in turn and invite Mr. Peter Kirstens, Advisor, European Commission. Peter, your presentation will discuss some of the thinking behind the digital euro project, and you have 20 minutes. The floor is yours. Thank you.
Thank you very much, Bilal. And it is a pleasure for me to be here with you from all over the world to present indeed the current thinking at the European Commission and the European Central Bank for a digital euro. And I must say from the outset that it's a project on which no decision has been taken yet. So far, there has been no decision taken that a digital euro will be introduced, but a great deal of effort is being spent on researching, testing the possibilities. And given the amount of time and effort that's being put into this project, it would probably be unlikely or maybe disappointing if in due course the authorities would not decide to pursue with it. If I could have the next slide, please. So my presentation, I will address a few of the definitions and key concepts of our work, then why we are looking at the digital euro, what are, from our point of view, elements for a viable digital euro design, how they relate to private initiatives, different types of digital euro, and then the current process we are in on developing the concepts, the experimentation, what decisions need to be taken, and what are the next steps. Can I have the next slide, please? So first, what would be a digital euro? Because many people think that the money they have on their cards or in their bank accounts is also digital. So what would be so different about a digital euro compared to the digits and the numbers that you see in your bank account or that you use with your Visa or MasterCard or your PayPal or your Venmo or whatever digital payment instruments you may be using? And what is essential for a digital euro, as it is for any central bank digital currency, is that it is central bank money. It is not money issued by private institutions. It would be made available to citizens and businesses in digital form. So that distinguishes it from cash, so notes and coins, because notes and coins are made available often through mints, but the decision to issue them is a decision of central banks, but they are not in digital form. And they are for use in payments. So that would be the purpose of the digital euro. It would not be as that much as a store of value. It would not be as a settlement instrument in wholesale banking and so on. And that's why we call it a retail CBDC, or a general use central bank digital currency. Now I've underlined retail there because to many people, the notion of retail implies that it is low value. This is not the intention of our project. We think it is a general purpose payment instrument for use by households and businesses. And in particular, when businesses need to use it, of course, the values cannot and should not be restricted too much. The digital euro would be complementing and not replacing cash. So it's not that we are going to, or we have plans to withdraw cash notes and coins from the market. And it would also not replace wholesale central bank deposits, which are available, of course, to the banking system. We would develop this in close synergy with industry and users, because we are driven very much by user needs, in particular the payers and the payees, but also, of course, the payment intermediaries. And we want to respond with this digital euro to their expectations and their needs. It is a very deliberative process based on a lot of consultations, some of it already done, some of it still ongoing, but a lot of experimentation, evaluation of these experiments and different technology solutions. There have to be decisions taken, and then it will have to be implemented and rolled out. We can have the next slide, please. As to the why would we do a digital euro? We have to start from a situation where we have a payment environment in the European Union, in the Eurozone, that works fine. So it's not that there is something that is broken and that needs to be fixed. But there are, of course, a number of very important trends which we see and which a digital euro can support or can respond to. First would be supporting the digitalization of the European economy. And as Bilal, you already referred to in your introductory comments, cash, notes and coins cannot really be used in the digital economy or cannot really be used online. So for online digital payments, we are currently relying on payment instruments developed by banks and payment institutions, but this is not public money. This is private money that is circulating in the market. And we believe that a public alternative is important. Secondly, the reason why we're doing it, and this will be a feature, I think, in many presentations, is that we do see a declining use of cash as a means of payment in quite a few of our member states. Not all of our member states, but in quite a few of member states, we see a very significant decline in the use of cash. And this decline was strengthened, of course, by the pandemic, which forced people to act and transact more online, and there, of course, they couldn't use cash. The third driver in the European Union, the Eurozone, for the digital euro is sovereignty considerations and the fact that we want to preserve a public money option among the emerging private digital means of payment that are circulating in the European Union. A new means of payment that are emerging, stable coins, for example, issued by large technology companies inside or mainly outside the European Union, but also the likely possible future emergence of foreign central bank digital currencies. So these three, digitalization, declining use of cash, and preserving a public money, European public money alternative, are the main drivers as to why we are considering a digital euro. Can I have the next slide, please? Now, how would a central bank digital currency, a digital euro, but any central bank digital currency, compare to other forms of money and assets? And the first, most to the left on the screen, is probably the most important, is that a central bank digital currency is a liability of the central bank. For the rest, it may, in its appearance, it may not be very different to commercial bank money or even stable coins, but it would be a liability of the central bank. Currently, the only payment instruments that exist and that are liabilities of the central bank are cash, which is available for the general public, and central bank deposits, which are only available to a limited number of users, mainly banks. If you compare this to commercial bank money, electronic money, and stable coins that entail a claim or a liability on someone or something, these are liabilities of private parties. And users always run a credit risk or a market risk, in particular credit risk, towards the private operators and private issuers of these means of payment. And the value, the absolute value or the relative value of these means of payment, these forms of money, is not assured by a central bank. It is assured by the companies on whom they are a liability. And then you also have, of course, means of payment that are not a liability of anyone, like, for example, Bitcoin. It is a sui generis instrument, but it's not, it doesn't present a claim on any company, any issuer, or any pool of assets that may support it. So this is really the categories, and the important concept is that it's a liability of the central bank. If I can have the next slide, please. Now, in our considerations, together with our colleagues at the European Central Bank, but also national central banks in the Eurozone and finance ministries of our member states, we are looking very much at what are the necessary elements to have a viable or successful digital euro. And most important in there is the top left corner, which is the end user perspective first, the users, the payers and the payees. And how can we ensure access? How can we ensure inclusion so that they can use it? But also, how does identity, identification, authentication work in a digital euro environment? Privacy has to be assured. Our consultations so far have demonstrated that this is the top concern and the top interest of consumers throughout the Eurozone. And how would it interoperate with private infrastructures, but also with other means of payment or other forms of central bank digital currency? And finally, how would it be secured? These questions all translate or have consequences for the design decisions that will have to be taken as to what precisely the digital euro will look like, and I'll come back to the possibilities there. But different designs and different design options have different effect on the end user perspective, on the access, on the security, on the privacy, on the interoperability. Necessary also for a viable product are a number of very complex legal issues. And probably one of the simplest of the legal issues is, well, is the central bank actually authorized? Does it have a legal basis to issue a central bank digital currency? And if not, what would it take? How could you give them the jurisdiction to do that? And under the Treaty on the European Union, there is a legal base for this. But this legal framework may also have to cover other issues such as access rights, privacy, possibly security, authentication, and so on. This, I would say, are mainly questions of the interface intermediation, the end user aspects. If you look more into the core of the system, so if we go forward with a central bank digital currency, excuse me, can you go one slide back? If you go back to, no, one more one, excuse me, this one, yeah, this. If you look at the core of the central bank digital currency, what would be the core infrastructure at its middle? So what would be the part that's operated by the European Central Bank itself? And how does this relate to the front end, the intermediaries, the interfaces to the consumers? And a very, very important decision to be taken there is whether the European Central Bank would be using existing infrastructures such as Target and TIPS, its Target Instant Payment System infrastructure, which can be put to good use for a central bank digital currency as well, or whether a new technology stack would have to be set up and developed to support a digital euro, and that would depend also a bit on the design decisions. Separately, but very important for the viability of a digital euro would be how it would be protected against money laundering and terrorist financing. So how would we ensure that such a digital currency would not be abused? And then finally, we envisage the digital euro very much as being intermediated by the private sector, banks, payment institutions, and so on. And how can this digital euro be intermediated by them? How can it be put into the pockets, onto the mobile phones, or the cards, or whatever interfaces users will be having by these players? If I can have the next slide, please. So I've already hinted at that. We see it very much as a central bank digital currency, as a liability of the central bank, but developed as a complement and in complementarity with private initiatives. This is for us very, very important because the private sector is close to users, and users have contacts much more with private institutions than with governmental institutions. And making available retail means of payment basically means that you are in continuous contact with users. So we think the private sector is a better place for that. But also, central banks do not have a mandate nor an ambition to take over and displace the banks and the payment institutions and develop a front end solution for all consumers, nor do central banks wish to empty the balance sheets of banks or displace banks in the current economic structure. But if we are going to work with private intermediaries, which is very much our intention, it is, I put it there lightly, but it's actually certain that these companies would not just be anyone, but that these companies would be licensed companies that are properly supervised. If I can have the next slide, please. Now, in all of this structure, there's basically two main schools of two main approaches for a digital euro, but we see this debate also in other central bank digital currency debates, and that is whether the digital euro would be an account-based instrument, in which case payments between a payer and a payee would always go through a clearing system and would actually move between different intermediaries. And in the Eurozone, this could, for example, be TIPS. The target instant payment system could be the central infrastructure through which the exchange of account balances and of credit claims in central bank digital currency could move. So the settlement of the transaction would really take place outside the actual transaction between the payer and the payee. Or will we have a digital euro that is a bearer instrument, where there is no separate settlement, but where the transaction and the settlement are one and the same thing? The payer hands over the payment instrument or access to the payment instrument to the payee, and that's the end of the story, just as we see currently with banknotes and cash, where there is no settlement. Handing over the cash or handing over the banknotes or the cash is the settlement. And if we go for a bearer solution, this will then raise questions. This raises questions as to what kind of technology do you use for that? What kind of technology stack? And should that be a blockchain or distributed ledger technology-based stack or not? To the extent that the digital euro would be there to offer an alternative to private stable coins, if that is the main objective winning out, that would of course plead for using more of the same technology, more a distributed ledger-based infrastructure, than if other objectives were to win out, and no decision on this has been taken because the different approaches both have advantages and disadvantages. And we need to see how that bears out. If I can have the next slide, please. So from the user perspective, what would the digital euro look like? Well, the user would mainly see an interface, and it would look pretty much the same as the interfaces they're currently used to. Could be cards, mobile phones, smartwatches, other carriers. But it would be available throughout the entire euro area. So all member states of the euro area. There are still debates, and this is part of the design discussions, as to whether or not the digital euro would be available outside the euro area, but still within the European Union, or whether it would be also available for retail use by businesses beyond the Eurozone and beyond the European Union, and potentially globally. It would serve the segments of the needs of all segments of the population. So not just the digitally natives, not just the crypto or the script kids, but really for everyone, with special attention for trying to address financial exclusion challenges which always exist. Luckily, it is not the majority of the population in the European Union by any stretch of the imagination, but we do have an unbanked part of the population. We do have vulnerable groups, and they must have access to a digital euro as well. We will be very mindful of privacy, because given that it's in digital form, it leaves a lot of digital traces, including on identity of the users. And we must make sure that privacy is preserved, which is not the same as anonymity. Privacy really refers to the fact that the processing of personal data is done under control, is legitimate, is not more excessive than what is necessary, but it does not mean that it has to be fully anonymous. Compared to other means of payment, what really would set the digital euro apart from other means of payment is that it would be, by definition, risk-free. It's central bank money. It would be digital, and it would really play, in our hope, a big role in the emerging Industry 4.0 discussions about machine-to-machine transactions, but also in Web 3.0, so very much the blockchain-based crypto web developments that are emerging. Of course, if it's digital, some people say, well, it doesn't work offline then, but to us, digital and online are not the same thing. So we also think that it could work in digital form while being offline, even though the capabilities of people to be online, of course, and increase on daily, weekly, monthly basis. If I can have the next slide, please. So while we have come a long way already with our colleagues from the European Central Bank in assessing, in consulting, in experimentation, we need to go further on this. And we are digging out all of these areas with great precision as to what precisely does a digital euro mean for central banking, for monetary policy transmission, how would it operate in the economic system, even if we don't intend it to displace deposits and commercial bank money, could it still have that effect? How would citizens really respond to it? Would they understand it? How really would it have to be designed? And we have to go into much more detail than we have so far, both the privacy aspects, but also remuneration, for example. If we are going to have intermediaries playing a big role in the digital euro, these intermediaries, private intermediaries, are unlikely going to be doing this for free. So the question is, what kind of remuneration can be built in? Because currently in cash and notes, there is no remuneration, even though the use of cash and banknotes is, of course, by no means free. There's no remuneration for it. And then we need to go much further in the technology aspects, in the infrastructure, how decentralization would work, how the offline usage can really be promoted. If you can have the next slide, please. So we are still in the stage, we were already, but we're still in the stage of very active listening to stakeholders, both consumers, and there I mean the users of the digital euro, both at the paying end, but at the payee end. But we're also engaged very much and listening to public authorities at the European and the national level, and of course our peers and counterparties in other jurisdictions, and of course the market participants, and then I mean in particular the payment intermediaries and the banks, because they are absolutely essential for a successful rollout of a digital euro. Can I have the next slide, please? So this also, the conceptual work is continuing. At every stage of our work, we have to assess whether the answers which we are finding, the solutions which we are finding, whether they really meet the policy objectives that we set forward, which are, as I said, digitalization, addressing the decline of cash, ensuring a public alternative to private money, whether that objective is met, and also whether the expectations and the needs of the users will be met. And we have to continue testing practical solutions as to whether or not they perform in practice as we expect them to perform based on the theory or based on the design. We can have the next slide, please. So in the middle of 2021, a couple of months ago, we launched this project much more publicly. Before, we had a much more private well, it was a public consultation, but it was much more under wraps discussion. But now we are in the what we call the investigation phase, which is much more public. We are much more outgoing now to stakeholders, have a market advisory committee, and the aim of this is to get also answers from the market to the many of the questions that were raised in the Digital Euro project that was presented based on the initial consultations. And we're also trying to develop a minimal viable product meeting all of the requirements which I set out, and see whether it all, and confirm whether it meets all of these objectives which we set out. So this is a lot of preparation, a lot of consultation, a lot of testing to ensure that the Euro system, the authorities of the Euro system, will be in a position to take an informed decision on going forward with a digital euro if they wish to do so. If we weren't doing these experiments and if we weren't preparing this way, we wouldn't be giving them a real choice, because if we don't prepare for it, if we don't assess it, the only choice they would have is not to do it. But by doing all of this preparatory work, they can decide to say, well, this is very good, we are going to do this, and they will take the decision to go forward. Or they may still say, well, look, it is very good, it can work, but we still decide not to do it because we don't really see the need for it. So we're really not prejudging the decision anyway, but we want the authorities of the Eurosystem to have a full choice of going either way in this very, very important process. Can I have the next slide, please? So, and that's where it's also the last slide of my presentation, the current process. We are in a process of consultation. We were there before, conceptualization, investigating the investigation of the solutions, the technology, the impact of these solutions. But we also have to prepare decisions, and these decisions will have to be translated into legislation. So that will also be required if we go for a digital euro. And then that decision, that legislation will have to be implemented. The infrastructure will have to be built and deployed, and the digital euro will have to be distributed so that it actually is available to the market. We started this seriously in 2020. Actually, there was work on it going on before, but it really got serious in 2020. And this entire process, up until the potential introduction on the market of a digital euro, will take us right up to 2026. Some people say, well, can't it be faster? We would have to cut quite a few corners if we want to go faster than this, because at the Eurozone we want to get it right rather than wanting to get it fast. Thank you very much, and I would be happy to take any questions, although I understand that the questions will come after all the presentations. Thank you.
Okay, thank you very much, Peter. Peter, you provided a very good overview of the challenges facing the European Commission for the digital euro. I think we will see with the other panelists whether they're also looking at similar issues, and it provided a very good overview of some of the complexities and operational challenges facing central banks in issuing retail CBDC. So let's move on now to our next panelist, Ms. Novlet Panton, Divisional Chief Financial Market Infrastructure from Bank of Jamaica. So welcome, Ms. Panton. So Ms. Panton is going to provide us an overview of the retail CBDC project from Bank of Jamaica. And Ms. Panton, you have 20 minutes for your presentation. Please.
Thank you. Thank you. Good morning. Good afternoon to all. I am sharing my screen. Can you kindly tell me if you're seeing my screen?
Yes, Ms. Panton, we can see your screen. Please go ahead.
Okay. Morning again. I'll be walking you through what we have been doing at Bank of Jamaica with respect to central bank digital currency. We are in the pilot phase of a CBDC. I just want to walk you through from the start what we have been doing and some, how we are looking ahead. The points I'll be touching on, mainly the motivating factors, why Bank of Jamaica, made this decision to start a CBDC. What are some of the benefits? How will it work? Some of the design requirements that we looked at, our project status, our pilot design, what we have done so far, where we are now, some of the risks that we recognize, and the mitigants that we have put in place. I also want to share with you, based on where we are all at different space or globally, I would want to share with you some of the lessons that we have learned, because they may be important for others, and some of the key success factors and what's next. Now, we all know what a central bank digital currency is, which is this digital form of central bank issued currency, and is therefore legal tender. I want to speak quickly about the different models to sort of provide you with the background why we chose a particular model. And when we started to look at CBDC, we looked at all the models that have been used, are proposed to be used across the world. And we start by looking at the cross-border, which entails digital currency issued by the central bank to commercial banks, which can be used for foreign exchange transactions across jurisdiction. To say, is this the one we want to use? We look at the wholesale CBDC, which entails digital currency issued by the central bank directly to the commercial banks, which in turn is distributed by commercial banks to the retail market. Peter spoke about retail earlier, and we look at retail in the sense that we are looking at the digital currency, which is issued by the central bank directly to the individuals. This would mean that all users in the country would have a CBDC wallet with a central bank. And we said to ourselves, is that what we want? What are the aspects of disintermediation for the commercial banking sector? And then we thought about the hybrid CBDC, which is really a cross between your wholesale and your retail. And The CBDC that we decided to issue in Jamaica is solely for domestic use, and it will not be used for cross-border transactions. We chose the hybrid model, and this will entail the Bank of Jamaica will issue CBDC to deposit-taking institutions licensed under the Banking Services Act in Jamaica. So we are going to be issuing to the commercial banks, the building societies, and the merchant banks. In addition, CBDC will also be issued to payment service providers that are operating the bank's fintech regulatory sandbox. We have been making it clear in our communication to our citizens that CBDC is not a deposit. It is cash in their purse or in their wallet. In this case, it is in the digital purse or the digital wallet. We made a decision in the designing of our CBDC that it will not earn interest, because as we have been explaining to persons, once you put cash in your pocket, it does not earn interest. And CBDC is just digital cash in your digital wallet. We'll be issuing our CBDC on a one-to-one basis with cash. That is, $1 Jamaica of cash would be equivalent to $1 of CBDC. Now, in thinking these things through, what were the motivating factors that we thought of? Why we decided to go this route? And one of Bank of Jamaica's key objectives is to support Jamaica's digital transformation by facilitating access for each citizen to quick, safe, and reliable digital retail payment mechanism. So there were other points of interest apart from the financial inclusion aspect. We wanted to look at increased efficiencies for banks as they relate to the cost for handling cash and courier costs for distribution that we saw as being inefficient. And we felt that CBDC would assist that. Greater efficiency in the currency management process of the central bank also. And also we wanted to provide a socially optimal mix of retail payment instruments that are out there in the market. And very importantly, interoperability between existing electronic retail payment systems, because those were issues that we saw that we hope and we wanted CBDC to address. So some of the benefits were spoken about already, financial inclusion. And to get that, we wanted to bring more persons into the official financial sector. So we also looked at simplifying know your customers criteria to ensure that the man in the street now can operate within the financial sector. And I may touch on that later on. We felt that it would be a benefit, would be more efficient than cash, instantaneous, even for remote transaction. Just like cash, it will not cost you. Then we looked at the safety issues. The users can benefit from enhanced safety when compared to physical cash. Even if the device is lost, your money can still be accessed. The data collection, we felt we'll get a better feel of data because the CBD solution provides real-time data on usage, numbers, volumes, as well as other key values for CBDC. Data provides additional accuracy for policy decisions to take place. Now, how will it work? Tier 1 BOJ will mint, the central bank will mint and issue CBDC to the commercial banks, just as we do now with cash, as well as we'll provide it to issue to payment service providers. In Tier 2 now, the commercial banks and the payment service providers will in turn distribute CBDC to business or to individuals through CBDC wallets. So we are using the hybrid. We issue to the commercial bank and the payment service providers, and just as what we do with cash now, and they will in turn distribute it through the use of wallets to individuals. Individuals and businesses will hold their CBDC wallets with their respective commercial banking entity and make purchases or receive payments using phone or through some other device, such as a payment card. Now, when we look, this slide provides in a nutshell some of the things that we thought of when we were thinking about designing our CBDC. Digital fiat currency that is non-interest bearing, right? We didn't want to be, for our CBDC to be interest bearing. We want something that will be tailored for Jamaica. We want it to be user-centric and easy to access. We don't want persons to be turned off to think that this is some high technology that they cannot use. Of course, I spoke about interoperable. We want the systems to be able to speak with each other. We want to satisfy the AML CFT. Whenever we introduce our CBDC, to satisfy the AML CFT issues. We want it to be operational 24/7, 365, instant process of transaction and settlement finality. Improve the currency management process, as I indicated. Ensure cybersecurity, data protection, and privacy. Peter mentioned those earlier. Support further access and uses for P2P, person to person, person to business, person to government, and vice versa. So those are some of the large business requirements that we looked at when we thought about CBDC for Jamaica. So in May 2020, the Bank of Jamaica took the decision to introduce a CBDC as an additional means of payment and launch it in July 2020. Just as an additional means of payment, there was no plans to say we are getting rid of cash. It's just we want to provide this additional payment means. Since May 2020, we did a number of consultation meetings. Peter spoke about that earlier with stakeholders, inclusive of our telecom providers. So we not only spoke to the entities in the financial sector, but we spoke to our telecom providers. In Jamaica, we have two telecom providers. We brought them in. We not only spoke with the telecom providers, but we recognized that we had to also speak to their regulators. So we also spoke to the Office of Utility Regulation in Jamaica. And we talk about their infrastructure, because the infrastructure must be right to introduce a CBDC. And we talk about their communication infrastructure that will underpin the deployment and the usage of CBDC. Then by August 2020, we launched the procurement process now. That is to bring in a solution provider that can provide us with what we are looking for based on our design, how we are seeing it. So on the 16th of July, 2020, we extended an invitation to providers of technological solution for the provision for CBDC in the bank's fintech regulatory sandbox, because we operate a regulatory sandbox at the central bank. In phase 1 of this procurement process, we had 43 submissions, and these submissions came from all over the world. These were not just submissions from Jamaica, they came from all over the world. We, based on our design requirements, recall I showed you that, we shortlisted to 6 vendors. Then in phase 2, the 6 shortlisted vendors were invited to conduct a product demonstration to present to us their solution based on our needs. So after that, we went into a phase 3 where the vendors were further shortlisted to 4 from 6 for a final assessment. And then out of that, this entity eCurrency Mint Limited came out ahead as a technology solution provider, and we had to get that approved at the cabinet of our country. So in fact, we were looking, this is the type of solution that we were looking for, a turnkey product that clearly establishes the currency management process, a solution that can mint, issue, redeem, destruct, similar to the currency management process of fiat currency that we do. We wanted a system, right, that would seamlessly interface with the national payment and settlement system, or real-time gross settlement system. We want a system that supports the distribution of CBDC through financial intermediaries payment solution and facilitates immediate integration with the existing legacy and payment system. We want something that will come in and just integrate seamlessly with what we have. We want a system that will be able to facilitate end user to end users on mobile devices, on cards. We wanted a system that will facilitate robust risk management tools, establish support real-time monitoring of email at the transaction level, something that would provide audit capabilities and configurable for BOJ use. So that is a solution that this entity, based on coming on top in terms of the procurement process, this is a solution we were looking for. So we went ahead and say, so we are now in the phases of June now and to December, because we thought between that period of time, we want to test this solution. So we actually went ahead and set up for each month what we are going to do, what the different teams will be doing for the different month. We broke that down in 2 stages where we're going to have simulation testing, just simulate with the solution provider, what is it that we hope to see coming out of the CBDC solution. Then we recognize in a stage, we're going to have the managed pilot where we're going to have real activities taking place. At that point, we thought about the entities that will be in the pilot, of course, the central bank. We wanted at least 5 DTIs and at least a payment service provider. Then we said, okay, what are the use cases that we need to simulate or to manage in our pilot? And government payment is a huge payment in Jamaica, right? So we want to see how can we, CBDC, handle the payment of government salaries and allowance, the payment of pensions, the payment of welfare, or path payment is a welfare payment for health and education, mainly for health and education, to low-income persons in our country. How will can we use CBDC for that? Then on our toll roads are highly cash-based in that you go pull up to the toll booth and you pay with cash. How can we use CBDC? Because there's a lot of safety and security issue with just that. How can CBDC be a solution for that? We are a big remittance country in terms of inbound remittance. And we want to say how can CBDC solve that issue of not having persons standing at remittance agencies in line to collect remittance. And of course, paying for goods and services, so small vendors. We have a number of small businesses in Jamaica, small vendors, persons who may sell, if you come to Jamaica, we have our famous jerk chicken. So persons who may sell on the streets, is selling jerk chicken on the street. How can CBDC be of value to them? So we look at the activities. What do we need to do? We started to look at interface and the integration, connecting the system, the equipment, how the hardware and software be installed within the central bank and within the other commercial entities that will be using it. We look at the hardware in terms of the currency process. Recall I spoke about the minting, the issue, and the redemption. We want to look at those activities. Then we want to look at the payment activities, the distribution, etc. And we want to see, as we go along, how we continue to onboard new participants. So this is how we were seeing it in our design. So we look at the pilot, and we spoke already about the project initiation, the pilot design, the sandbox. I explained that we were testing it in our sandbox. And we talk about the managed pilot. That is now having the entities in the sandbox and actually transferring real money, real CBDC, real currency while in the pilot. And then we look to national rollout. So what have we done? We have done the API user interface training. We had to do a lot of training, okay? Not only for the central bank, for all the commercial entities, commercial banks that will be dealing with using the CBDC. We had to go through integration and connectivity testing because there are certain specific equipment that needed to have been used. That as I indicated earlier, we wanted a system that would seamlessly integrate with our legacy system, our RTGS, with our payment systems as we have them in Jamaica. We had to establish data centers, not only in the central bank, but with the commercial banking entities. The shipment of the hardware, all of those things came in, and then we did some dry runs. At the Bank of Jamaica, we actually designed and developed a CBDC wallet and an application for BOJ staff. And I just pause here because I spoke about the commercial banks. But at the Bank of Jamaica, for our staff, we have what we call our own commercial bank, where you can open an account. This is only for staff members at the Bank of Jamaica. So that aspect, that banking aspect for the central bank, we are also as staff members will be part of the pilot. So we engage persons, we engage pilot participants, got their commitment through what we call, MOUs to say we will participate. At this point in time, one of the largest commercial bank in Jamaica is in the pilot, the National Commercial Bank. That's the only commercial bank at this point in the pilot that will go up until December. And as I indicated before, the Bank of Jamaica banking department are the first two entrants in the pilot. We have deployed a phased approach now to getting additional pilot participants. We are very proud to say on the 9th of August, 2021, we did our first minting ceremony of actually minting CBDC during the testing phase in the pilot. We minted 230 million worth of CBDC during that phase. And this picture is just a picture just representing the day of the minting ceremony, where we have the governor, our deputy governors, and our minister of finance. It was just a photo op. From this 230 million that we have minted so far, we have now issued 5 million to that commercial bank that I told is already in the pilot. And we have issued 1 million to the Bank of Jamaica banking department, because this is the amount now that is going to use to provide wallet service to staff members, and the commercial bank will provide wallet service to their customers. So we are far away into the pilot. As a matter of fact, the 65% is much more now. And we are in this phase where we are developing and we are thinking about now for the rollout. The pilot will end on the 31st of December, and we want to roll out during the first quarter of 2022, the things that we have tested. So where are we now? As I indicated, we have gone to the initiation and went to the planning, because a lot of the work came before the pilot. We are development phase now. At this point, we are still doing ongoing work on system integration. Communication we saw as being very important, advising. So we actually, in terms of a name for our CBDC, we had a national competition where we asked persons in the country to provide a name, a tagline, etc. for our currency. That is over now in terms of we have a name, but we won't disclose it here now because there's still some things that we are looking at in terms of ensuring that the name is not being used by anyone else, those sort of legal things. And of course, the legislative amendment, which is very important for those looking at CBDC, and Peter mentioned it also. When you look at your central bank act, your central bank legislation, it must be important that in that legislation, it speaks critically to the fact that CBDC is a legal tender and it can only be issued by the central bank. That wasn't in our act. So at this point, we had to look at our act and make amendments to that. And that is going through the legislative process, and that should be ready during the time of rollout next year. The risks, of course, we know them. The AML safety risk. The design of the CBDC will continue to allow for tracking of all payments by the FIs and by the relevant authorities. We're not doing anything different from what we do with fiat currency, because right now the commercial banks have to undergo or ensure that AML safety issues are being looked at, and they're able to track cash coming into their organization. So it will be no different. The data privacy is very important. Bank of Jamaica CBD solution protects the protection of personal identity through built-in solutions such as encryption techniques, digital signatures, multi-factor authentication. I spoke already about the hybrid model that we are using. So disintermediation, which would have been a risk if we were to have allowed the man in the street to have a CBDC wallet with a central bank. So the bank design of its system implicitly mitigates against disintermediation as it employs a two-tier model. We issue to the commercial bank and they distribute to their customers. The cybersecurity issues, very important, impatient of debate. The CBDC solution has a high level of administrative, physical, and logical controls, allows for role-based user management in the minting and issuing process. We even have external to the bank, an entity that came in that is in right now doing independent vulnerability assessment and testing. So we are not only saying it, we have independent party coming to look at this, walk through the system. One of the issues that we saw as a risk is a slow take-up, because culturally, persons are not just, we are going to say persons are going to go get into CBDC so quickly. So we have implemented a robust communication plan. Anyone looking at CBDC in your country, that is very important to put in place. And we have been in the print media, social media, on our website. I spoke about the tagline and naming competition that we had thrown out there to the public. We have done focus group and we are continuing to do surveys. The next step, we'll be carried out a bigger survey November 20 to gauge understanding and expectation of our public. And of course, by then we'll roll out our name. So the lessons learned, quickly, when we start this, you have to have dedicated resources to do this. Often we don't have enough resources thrown into a project like this. So what we did, the cross-functional teams, committees to do different aspects. We need to build technical capacity. Prior to us starting to write down the first word on CBDC, we were providing our staff with external training. We were involving external groups outside of Jamaica just to draw from experiences shared. In the Caribbean, we have the Central Bank of the Bahamas with their sand dollar already rolled out. We were with them right throughout. We have the ECCB with their Dcash, another entity that we were with. So we draw from experiences and we seek support from other countries. The business requirements which I spoke about, we can't be talking about that we are going into CBDC without spending significant time in building and identify the key requirements. What is it that you're looking for? Analyze the business operations that will be doing this. We talk about assigned officers with responsibility, there's going to be a number of project conflict when you're in it, right? So we have to ensure that we are looking at those and managing the changes as we go along. The communication I spoke about must be continuous. What we have found is documenting each stage very carefully, because sometimes we have to go back and look at something to fix something that we are seeing. The vendor expectations. We have to have continuous, and I'm telling you, this is continuous because you'd have had a meeting with a vendor, a commercial bank now, and then you're asked certain other questions and to meet with them. So you have to have continuous discussion. There are going to be some legal issues between yourself as a central bank and the commercial banks out there. So the lawyers must be at the table when you're looking at these things, and they need to be there very early. Then another important thing, we have to set the success criteria. We are doing a pilot, but at the end of the day, what will success look like? So we just thought about it and said, these are the things we want to see. We want to see out of this amount minted, we want to probably see 5% in circulation as a percentage of CBDC minted in the pilot. We want to see actual usage in this. We want to see of the number of entities committed to onboard, we want to see at least 80% of them coming in. And we want to see at least 2 active wallet providers in the pilot. We want to see at least 1,000 registered users. So these are things we thought of, what is it that we want to see in the pilot? So, and you can see the slide on the on the screen, but we actually sat down and think of what is it that we want to see. Then we also, and we set out of that, we set our KPIs in terms of what will success look like at the end of December. So what the timeline, we have been through the July, August, September, where we have brought in the equipment, we have minted, we have tested, and now we are in November, where the entities that I indicated, this National Commercial Bank, the One Commercial Bank, the Bank of Jamaica, we are now starting to test we have designed wallets, CBDC wallets, and we are now about to start the testing of the P2P transfers, etc. So in December, we'll be assessing the results of the use cases that I indicated earlier. And come December 31, we want to announce the pilot completion. The pilot scheduled for completion December 2021, and we want to have the national rollout in the first quarter of 2022. So that is what we have been about at Bank of Jamaica with respect to our experience with CBDC. Thank you so very much for listening.
Novlet Panton, thank you so much for sharing the experience in Jamaica. You're, according to your timeline, right at the heart of the implementation of your pilot. So we really appreciate that you took the time to share with us your experience. I am sure many central banks around the world are very eager to hear and know about your implementation and your pilot project. And so thank you for taking the opportunity to share that experience today on our webinar on digital currency. We'll come back to you with some questions. I'm sure many of the participants have some questions for you. So thank you. We'll let you rest a little bit and we'll come back with some questions.
Thank you so very much. Thank you.
Thank you. Our next speaker is from Riksbank. Actually, speakers, we have two, and they will be sharing their experience with the e-krona retail CBDC project implementation in Sweden. Mr. Johan Schmalholz, e-krona pilot division, Riksbank, will be taking the floor first, followed by Mr. Ian Vitek. You both have 20 minutes, probably about 10 minutes each. You have the floor. Thank you very much.
Yes, thank you very much. My name is Johan Schmalholz and I work at the e-krona pilot division at the Riksbank, the Central Bank of Sweden. And I'm sitting here with my colleague Ian Vitek, who will continue the presentation with some more technical and security aspects of the e-krona project. Okay, some short background why we are at the point where we are. In Sweden, cash is declining rapidly. The usage of cash is declining. And we can see that on this survey that we conduct every second year since 2010. In 2010, almost 40% of the respondents said that they made a latest payment by using cash. And last year in 2020, only about 8% of the respondents said that they used cash when making the latest payment. So we have a rapid decline of cash in Sweden, and that's the background why the Riksbank really started to look into the topic of a retail CBDC and e-krona. I would also like to be very clear that there is no decision taken in Sweden in order to really go forward with an e-krona. And I will come back to that later. We have a parliamentary inquiry that is looking into this topic and that will take the final decision in this. When it comes to the objectives of why going forward with investigating the topic of a retail CBDC, it's important for the central bank to ensure the continued access to central bank money. Today we provide cash to the public, and in the future we might provide an electronic alternative to cash. And it's also important to have a resilient payment system. And when all the payments are electronic in the future, we are almost there at the moment, it's important that we have a resilient payment system. And an alternative to the commercial payment system, for example, if the card payment system is encountering problems, an e-krona retail CBDC might be an alternative and could provide resilience. It's also important to provide innovation and competition to the market, and the mere existence of an alternative to the commercial payment infrastructure would mean that we put some pressure and competition on the market. In 2018, the Riksbank decided to establish a separate division at the General Secretariat, the e-krona pilot division. And in 2019, this division conducted a public procurement, and Accenture was awarded a contract and as a technical supplier of a potential retail CBDC solution. And the general objective of this pilot or proof of concept project is to learn more, to establish experience and learn about the challenges and the opportunities from a technical and from a legal perspective. And during last year until February this year, we have established a technical solution that is built on a network where we have participants that are operating nodes in this network. And in order to become a participant, you also need to be you also need to have access to the real-time gross settlement system of the Riksbank, the RIX system. And the participants are entitled to order a retail CBDC to be issued by the Riksbank. And the Riksbank will then debit their reserve accounts in the RTGS system, and they will credit the nodes that the participants operate in this network. And the participant will then store a retail CBDC in digital vaults in these nodes. And the participants might be, for example, payment service providers. And the general public then have the ability to request a retail CBDC to be issued to them. And the participants will then debit their payment accounts and credit electronic wallets, which contains the e-kronas. And the end user, the general public, is then able to make payments in e-krona between their electronic wallets, and they can access these electronic wallets by different payment instruments. We have in the first phase of the pilot created a smartwatch solution, a card solution, and also a mobile app solution that give the end users access to the electronic wallets. Each transaction has to be approved by a central function in this network that is called a notary node. And this notary node validates that this transaction has not been performed before, that it's not a double spending. When it comes to interoperability and standardization, we can say that what we have tested in the first phase of the pilot is transactions within the network. And it could be transactions between the wallets in e-kronas, but it could also be transactions from, for example, an e-krona wallet to a payee that only has a payment account. And then it will be a more of a traditional FX transaction where the e-kronas will be exchanged to commercial bank money before the money is deposited at the payment account of the payee. And that would also be the case, the FX scenario, if you would like to transfer money from the e-krona network outside to payment receivers outside the network. If you look at the payments within this network, it's useful to look at what kind of money that is circulating in the network, and you can compare it to uniquely identifiable units of value. Some say tokens. Maybe it's more easy to say that. And here we have an example where Maria has a token worth of 100, and she would like to transfer 60 e-kronas to Johan. And what will happen then is that the notary node will first validate this transaction, and if it's okayed by the notary node, the 60 e-kronas will be transferred to Johan's participant in the network, and Johan's participant then needs to validate the authenticity of these token. And in order to do that, Johan's participant needs to look back to all the previous transactions that are associated with this latest transaction back to the actual issuance by the Riksbank. And if this validation process is okayed, then the money will be transferred to Johan's wallet, and 40 e-kronas will be sent back to Maria's wallet in exchange. We have, in February, we concluded the first phase of the e-krona pilot project, and we have some conclusions from that project. From a technical perspective, we can conclude that This technology that is inspired by distributed ledger technology and blockchain technology, it's very new. It has not been tested before for retail payments. And as mentioned before, it's a potential parallel payment infrastructure to the existing commercial payment infrastructure. We have also validated that it's possible to steer the demand and supply by implemented technical features like interest rate and caps on the e-krona. So from a technical perspective, that is not a big issue. It's more a policy issue. Yeah, and regarding the legal issues, we have looked into the different types of money that we have today in the society. We have cash, we have bank deposits, and we have the e-money directive in the European Union. And one conclusion is that the money that is circulating in the e-krona network is quite similar to banknotes. However, if you would like to have interest on a cash-like solution, that would be quite hard, because in Sweden, cash is not considered to be a legal claim. And then you have to really to construct a new kind of legal instrument if you want to have a cash-like solution and also combine it with interest rate. It's also important to emphasize that the commercial payment infrastructure are covered by the AML, Know Your Customer, and counter-terrorist financing legislation. And one conclusion, it would be very hard for the central bank not to follow that kind of framework. And we can also conclude that there is a sharing of data in this solution that might be a topic for when it comes to bank secrecy and the protection of sensitive personal data. Looking forward, where we are at the moment, we have concluded the first phase of the pilot project, and we are in the middle of the second phase. And what is at the moment, we are deciding whether to extend this project for another year in a third phase, and we also looking into preparations regarding a potential future procurement, because we have this parliamentary inquiry which I mentioned, and the politicians will then give us a report in November next year, and this report will really be decisive for the future of the e-krona pilot project. Okay, thank you very much. I think I'll stop here, and I will leave the word to my colleague Ian.
So, I will talk about some insights on retail central bank digital currency. In the e-krona pilot, I will talk about. I will be much more technical because we are running a prototype and trying to develop a prototype, so we can be more technical. I hope you can. If you have any questions, you can reach out to me afterwards. We'll talk about token selection, performance, impacts, and privacy, and operational security challenges. My name is Ian Witek. I have a technical background, and the last 2 years I've been working with everything regarding security within the e-krona project. So what is backchain and why do Corda work, and how to exploit a bad implementation? So we are using Corda. We started with Corda 4.5 and now running 4.8 actually. So if a payment service provider wants to have e-kronas, the payment service provider asks for an issue, and for in this example 1,000. So from nothing we create a transaction. I call it transaction 1 here in this example, And it creates one token that's owned by the payment service provider. That's very simple, but then the user A wants to have 200 on the same payment service provider. Then the Corda will find the token, lock it, and create a new transaction, and create a new token with 200 that says user A owns it, and it has a reference back to the old. But it also some change here. So actually the payment service provider makes its own change of 800 and references back, and then the lock is removed and the token, the first token is spent. But if user A wants to send user B 50, it's the same thing. Will just create a new transaction, create a new token of 50, and the user will actually create its own change of 150. So how to exploit this is if user A repeats, it makes a withdrawal of 3 and deposit of 2 over and over again, it will be lots of many small tokens owned by different parties here. And if user A then deposits all token to the payment service provider, then payment service provider owns all these tokens. If an administrator wants to redeem everything, we give it back to the Riksbank and have kronor instead, you can see the problem here. It could be some performance issues here when all these tokens is going to be redeemed and checked. So to exploit this better, you can make lots of withdrawals, split up all the tokens, merge them together again, and do this over and over again. So you have a very long and complex backchain, and this backchain is needed to verify the actual tokens. And I call this you can create a token that is a transaction of death. And what can you do with this transaction of death? Yeah, you can crash Corda nodes. So what you do is you take this transaction of death that the user A has and sends it to user C at a totally new payment service provider. Some here in the process, this token transaction of death will be recorded in the notary, but there will be crashes because it can't handle this very complex backchain, and it can be inconsistencies here where the database think the token is available, but maybe the notary says it's been spent. So that's some performance impacts that we have found during this building this prototype. I also want to say something about the privacy issues that we have found. It's as I explained earlier, I want to point out to be able, when payment service provider 2 receives this token number 3, it wants to of course validate the authenticity of the token. Is it actually central bank money? So to do that, the payment service provider 2 need all these transactions and tokens that's in this red frame. So when the payment service provider 2 gets all these tokens and transactions, the payment service provider 2 Corda node can verify this is money issued from the Riksbank. So to explain it a little bit more, so I am an evil administrator of payment service provider 2. I'm not that evil, but if I am an evil administrator, I have a user H on my Corda node that just received 60 from user A from PSP1. The Corda node of PSP2, yes, we'll see that, but it's signed by user A, and actually we want to see the back chain, where does this money comes from? So the Corda node will ask payment service provider 1, where did this money come from? Well, 50 comes from payment service provider 1, user G, and maybe 20 from user C at PSP3. But we have to make it all, we have to have all the tokens from the issuing. So we have to have more and more information, so we get all of the back chains from all issuing. When we get the last transaction, then we can validate it. But I don't know if you can see my arrow. Yeah, you can do. You can see that. But if any user at payment service provider 2 has, in this example, made any transaction with user C at payment service provider 3, then we as an administrator of payment service provider 2 can see that this user C had done a withdrawal of 150 and done a payment of 75. And is this bank, Swedish bank secrecy regulation, bank secrecy regulation, or GDPR compliant? That's up to the lawyers, but it's an issue that we have to think of. So in the practical example, you have to extract the back chain, get the transactions, you do some data mining, and you visualize it, and you can get I just created a picture like this. I'm a payment service provider 2, but I can, from only data on payment service provider 2, I can see that the Riksbank had done an issue to the payment service provider 1. One user at payment service provider 1 with this wallet address has done a withdrawal and then paid another user payment service provider 3, and then I got that payment. But I get lots of other information also. So of course, we need to be compliant with European General Data Protection Regulation and Swedish Bank Secrecy Regulation. But I handle all type of security, and of course, all types of security has to be handled. Performance and authenticity of the digital currency. As I explained, long back chains and many tokens has to be solved before going into production with a token-based retail central bank digital currency. And we have also run into problems with what we call a concert scenario. It's like 50,000 people paying to just one wallet, like 50,000 tokens. Right now, it's hard-coded in Corda that you can just have a transaction with 10,000 tokens. So we have to solve that, but maybe it doesn't matter. High availability, of course, and in-memory token selection. How to do maintenance without disruption? How can you patch the operating system without shutting down the payment system? And we had some crashes that created inconsistency in the databases, and it's very bad. And then how do you restore what's called going back to the 2-hour
disaster recovery, return to operations?
Return to operations. How do you do that when you have signed transactions? I know how to do a restore of a database, but all the signed transactions, you can't just go into a field and just enter a balance. You need all the signed transaction and put them into the database. So you need to have like a transaction database. I'm coming to that, but everything else also has to be with information security, IT security, law, regulation, finance, and compliance. I'm 30 seconds over. And the non-repudiation, and is there anything called secure offline? When I get presented of secure offline, most of the solutions are just signed IOUs. So of course, there are many solutions: chain snipping, chipping, key rotation, zero knowledge proof, and other encryption. And there are also, we can maybe using validating notary nodes for offline hardware wallets. And maybe there are some restore procedures or function for correcting database inconsistencies. But I really want to, for every solution presented, there can be an impact of performance and all other requirements that's needed that we to get this retail central bank digital currency has to be fulfilled, of course. So of course there may be one solution, but it maybe break some other requirement that we have. So the Riksbank is now experimenting with other designs, and we'll also look at other technologies. Thank you for attending. That's was my presentation. Thank you.
Thank you very much, Ian and Johan, for sharing with us the pilot in Riksbank in Sweden. Very much appreciated. Ladies and gentlemen, we're a little bit over time, so we won't have a lot of time for questions. What I would suggest is that I have one question to all the panelists, and that question is the following. What technical standards would help central banks in implementing retail CBDC? And I would like to perhaps start with Peter. So Peter, if you could turn on your camera and maybe try to answer that question. Then I'll go to Novelet and then back to you, Johan and Ian. So do we have Peter online? Peter, you're on mute. If you could unmute your line, please.
Yes, you do, but the line just broke up, so I couldn't hear you.
Okay, let me repeat. We just have time for one question, the same question to all the panelists. And the question is the following. What technical standards would help central banks in implementing retail CBDC?
I think that especially central bank technical standards for the interfaces, in particular to guarantee interoperability and privacy at the interface level, would be hugely helpful, because central banks themselves do not have control over the interfaces, but want interfaces that are interoperable and that assure privacy, security, and interoperability.
Thank you. Very clear, very concise. Thank you very much, Peter. Novelet Panton, if you could turn on your camera.
Yes, thank you. Well, similar to Peter, I think the standard that is going to be very important is interoperability. And we have to look at the most modern payment standard. And at this point, the ISO 2022, I think is very important that central banks are now implementing this right across their payment system, because that will facilitate the interoperability at the highest level. So we need to get all the payment systems right up to speed in terms of the latest standard, and which is for payment system is the ISO 2022 right now. That was just my quick response to that.
Fantastic. Thank you. Thank you very much. Let's move now to Johan and Ian. Same question around standards.
Yeah, thank you very much. Yeah, standardization is always difficult when you're entering new territory, and from a national perspective, if you look at the retail CBDC as a pure national service, I think that is not rocket science. I think that is possible to create interoperability and based on some kind of standard. If it's ISO 20022 or if it's just some kind of agreement that you populate a certain element in a payment message with some information, and that information will tell, for example, the receiving PSP that this is a retail CBDC payment. I mean, but I think it's more difficult on an international level if you will look to create standardization and interoperability, and then it gets more complicated. And from my perspective, one major step would be to enable the RTGS systems worldwide operated by central bank to handle instant payments and also to be open 24/7, then we have a good foundation for improvements here. And this is a small step, but it could be a good first step. Thank you.
Ian?
No, I don't want to say anything. Thank you.
Okay, all right. Thank you very much. So, ladies and gentlemen, I'd like to thank all the panelists and the participants for joining today's webinar. I'd like to mention that the event was recorded and that the recording of the webinar will be available on the event website a little later for those who either missed the event or had to leave a bit early. I wish to invite you all to the next episode on the 23rd of November at 4 p.m. Geneva time, where we will discuss the design of wholesale central bank digital currencies. I'd like to also take this opportunity to inform you about the upcoming DC3 conference from cryptocurrencies to CBDCs, which will be held online from 25 to 27 January next year, 2022, and will highlight the work of the Digital Currency Global Initiative, as well as emerging industry trends and initiatives in digital currencies, in particular, with regards to, one, sharing insights on the latest trends in central bank digital currency, cryptocurrency, and stablecoins. Two, discussing emerging developments and areas where technical standards are needed for the architecture and interoperability of digital currencies and their integration with existing payment systems. And three, fostering dialogue among digital currency ecosystem stakeholders and regulators on key lessons learned from digital currency pilot implementations. The three-day conference will consist of three thematic tracks on central bank digital currencies, stablecoins, and security, respectively. 3 deep dive sessions on interoperability for central bank digital currency, implementation interoperability for stablecoins, and security validation model for digital currency systems, respectively. And 3 high-level panel discussions on topics such as the efficiencies that stablecoin can bring to financial inclusion and to payment systems, architecture models for CBDC and stablecoin implementation, definition of a digital currency ontology model, and security assurance for digital currency systems, amongst others. I wish everyone a nice day, evening, or night, and I declare this webinar closed. Thank you very much.